Hello everyone, welcome back to another IPO analysis. Today we are analyzing the Lalithaa Jewellery Mart IPO. We'll quickly cover the company, IPO details, subscription, financials, key KPIs, risks, and finally answer the most important question, should you invest or not? So let's start with the industry. Lalithaa Jewellery operates in India's organized jewellery retail industry, a large and growing market supported by rising incomes, increasing preference for branded jewellery, and the shift from unorganized to organized retailers. Coming to the company, Lalithaa Jewellery was established in 1985 and has a strong presence in South India. As of financial year 26, it operates 61 stores across 51 cities with a significant presence in Tier 2 and Tier 3 cities. The company primarily sells gold jewelry, which contributes more than 90% of its revenue, along with silver and diamond jewelry. So the company has an established regional brand, but its geographical concentration is also something investors need to keep. Now, let's look at the IPO. Lalithaa Jewellery is raising approximately rupees 1700 crores. The price band is rupees 190 to rupees 201 per share with a lot size of 74 shares. So at the upper price band, one retail lot costs approximately rupees 14,874. The IPO consists of a rupees 1200 crore fresh issue and a rupees 500 crore offer for sale. The fresh issue means the goes to the company, while in an offer for sale, existing shareholders sell their shares. The company plans to use a major portion of the fresh issue towards opening 10 new stores. Now, let's look at the investor demand. The IPO is divided primarily among QIBs, NIIs, and retail investors. QIBs are institutional investors, NIIs are high net worth or non-institutional investors, and retail investors are individual investors. This time, the percentage of net issue is 50% for QIBs, 15% for NIIs, and 35% for retail investors. Now let's come to the financials. This is probably the strongest part of the Lalitha story. In financial year 26, the company reported revenue of approximately rupees 25,024 crores compared with around rupees 16,897 crores in financial year 25. That's almost 48% revenue growth. Even more impressive was the profit growth. Profit after tax increased from around rupees 365 crores to rupees 1010 crore, which is a growth of roughly 177%. So both revenue and profitability have improved significantly. Now let's quickly look at some important KPIs. Lalitha reported a financial year 26 ROE of around 42% and ROCE of around 43%, both of which are very strong. At the upper IPO price, the company is valued at roughly 11 times of financial 26 year earning. That is considerably cheaper than many established listed jewelry players. So, from a valuation point of view, the IPO looks very attractive. For the risks that I analyzed, the first risk is geographical concentration. The company is heavily concentrated in South India. Second, the gold concentration. More than 90% of revenue comes from gold jewelry. Third is inventory and cash flow risk. Jewelry requires significant working capital. And finally, Lalitha faces strong competition from much larger players like Titan and Kalyan. So the company is attractive, but it is definitely not risk-free. So, should you invest? Let's quickly balance the positives and negatives. Strong revenue and profit growth, excellent ROE or ROC, a strong regional presence, and relatively attractive valuation. Negatives, high inventory requirements, negative operating cash flow, geographical. Lalitha Jewelry a subscribe rating with moderate conviction, particularly for investors with a long term to medium to long term horizon. On listing gains, the GMP and subscription numbers indicate positive sentiment, but remember that GMP is unofficial and can change. So, at the IPO price, the risk reward looks reasonably favorable, but investors should keep an eye on cash flows and expansion execution. So, that was a quick analysis of Lalitha Jewelry. We covered the company, IPO structure, subscription, GMP, financials, KPIs, valuation, and risks. Thank you for watching.